Welcome to the Markets Mindset. Today we're breaking down one of the most important truths in trading. Account growth comes from one thing: combining structure with timing, not structure alone, not timing alone, both together. It's the 1-2 punch that turns a random, inconsistent trader into someone who can string winning weeks together. Most traders think they have an edge, but what they actually have is half an edge. They understand structure but enter at the wrong time. Or they time entries well but trade in the wrong direction. When you only have one piece, you always feel like you're almost right, but somehow still losing. Let's fix that. Today we'll simplify exactly how structure and timing work together, why missing either one destroys your results, and how to apply them with precision. Let's break it down. The first punch: structure, direction, plus bias. Structure tells you the side of the market you should be interested in. Nothing more, nothing less. Market structure is the guidance system, the compass, the big picture. It answers the questions: where is liquidity? Which side of the range is vulnerable? Who is currently in control? Are we in a trend, range, or expansion? Are we sweeping a high or a low? Has the market broken structure, and in which direction? When you read structure correctly, you stop guessing. You stop forcing trades against momentum. You stop switching your bias every 5 minutes. But here's the mistake retail makes. They think structure produces entries. It doesn't. Structure gives you the directional framework, not the trigger. Structure without timing is just theory. The second punch: timing, precision entry plus optimal moment. If structure answers the where, timing answers the when. Timing is the skill of striking when the market is ready, not when you feel ready. It's about waiting until the market has swept liquidity, shown a shift, and created a window to enter without exposing yourself to unnecessary risk. Timing is the silver bullet window, the high probability time of day, the break in market structure right after a manipulation, the displacement candle that tells you smart money has stepped in, the fair value gap created immediately after the sweep, the moment when the market reveals its intent. Good timing shrinks your stop. Good timing increases your RR. Good timing makes the move feel effortless. But timing without structure? That's a recipe for disaster. Great timing in the wrong direction is just a fast way to lose money. Retail mistakes: timing for luck. Professionals use timing as a weapon. Well, you need both. Here's the problem with most traders: they nail structure but enter early, or they nail timing but trade the opposite direction. Both lead to the same outcome: inconsistency. Account growth requires knowing which side of the market you should be on, entering only when the market gives you a setup that aligns with that side. When structure and timing align, trades feel smooth. Price moves away from your entry quickly. Your risk stays tight. Your conviction stays high. You're no longer hoping, you're executing. When one is missing, everything becomes noisy. Your confidence drops. You enter early, you exit late. You hesitate, you chase. You revenge trade. Structure plus timing equals confidence, and confidence equals consistency. Applying the 1-2 punch, let's give you a simple blueprint you can use every day. Step 1. Identify structure. Are we trending, ranging, expanding? Which side of the range is likely to be taken? Where is the liquidity? Once you have this, you have your bias. Step 2. Wait for the sweep. A sweep is your permission slip. It clears out the old move and prepares the real move. Step 3. Watch for a market structure shift. This tells you smart money has reversed the flow. Step 4. Use timing to enter. This means entering during a displacement candle, a fair value gap, a breaker block, a silver bullet window, a retest of the shift. This is your trigger. Step 5. Ride the direction structure I already told you about. No guessing, no switching bias, no emotional reactions. This is how real account growth is built: clean, structured, disciplined entries that flow with the market, not against it. The bottom line: most traders lose because they want perfect entries without understanding context, or perfect context without the patience to wait for timing. Trading is simple. Once you commit to this, structure tells you what to do. Timing tells you when to do it. When you finally combine the two, trading stops feeling like gambling and starts feeling like a system. Thanks for watching. Please like and subscribe.